He goes, ACX here. This is just a video, something different. Most people I see have gone from crypto now and are moving into FX, which is great. Diversify. There's so many more opportunities out there rather than just under the crypto spectrum. But I really want to show probably my favorite one, stocks, which I haven't seen a lot of people moving to yet. But honestly, there's many reasons why you would love stocks. Just particularly for me as well, day trading stocks within a session where you know the volatility is going to come. So you can stand around and sit around and watch crypto charts for a while everything's moving sideways. You know, you're literally just staring at a screen waiting for something to happen, and you're missing out on time and money essentially. So you can diversify into other markets to really find opportunities to make money with, literally any day, any time. So the thing I love about stocks for me is that every day where I live in London, they open at 2:30 p.m. So it gives you a good time to get awake and look at the charts. And there's different ways you can play stocks and very good opportunities for day trading. So I don't like to hold them overnight purely because you get gaps in the market overnight, especially in pre-market as well. So it does get a bit risky when you're doing it swing trading. If you want to do swing trading, study it for stocks and know about your risk and know potentially that you could get stopped and get filled at a much different price to where your stock price actually was, so you can actually lose a lot more money. But for day trading, that's essentially what I use stocks for. And the reason for this is because you get, like I said, perfect places to find volatility. So for example, here at the open, you can see you had earnings. So earnings will normally come out pre-market or after hours on the previous session. So they're not in trading hours. And then you can get an earnings beat or an earnings loss. So here you see WDC, that is surprise loss. But nonetheless, price rallied. And you can see these opportunities here. As you can see the volatility straight out the gate here. These are 5-minute candles. You get a good pump, pullback, pump. You know, you didn't break this swing low here. This tiny little pullback. And you just had a continuation. And you can bank good money here on leverage. You run from 38 to 41 now. My broker, I can get 10 to 1 buying power. So use leverage if you must and if you will. Make sure you know how to use it. But for stocks like this, as you can see, earnings, we're coming up into earning seasons now. So you've got all the Netflix, the Googles, Apples, all them lot. They're all coming up for earning season. So you get great momentum in all these plays. You don't want to be sitting in anything that's just going sideways and consolidating on low volume. You want to be playing the names that give you, you know, a good range and breakouts and easy to manage trades that will get you the most money that day. So how to find earnings? There's a website here called Finviz. This is Finviz. I've used this for many years. It's a free stock screener and you can literally find anything on it. So you can go to technical. Excuse my slow MacBook, I complain about this in every video. And you can literally search from things like 52-week higher lows, patterns, candlesticks, gaps. And what you want to do to look for earnings, go to descriptive, earnings date, next 5 days. So these will show you, it's Sunday now, these are going to show me what the earnings are for this week. So you've got Apple, ABC, you've got a list, it's 20 pages long, and there's just so many, so keep an eye on them. But the best thing to do, what I like to do pre-market, so pre-2:30 GMT my time, is do this little scan. Technical, I want the gap up 3%. And you can do this vice versa as well, so you do down 3%. Volume over 400k. Now you want liquidity in the stock. You don't want to be caught with a massive spread and struggling to get out and getting caught a lot of slippage. And price over 2, I don't really like to trade penny stocks. I like to keep it a bit safe with liquidity and price over 2. So that's a basic scan. And as you can see here, we've got things like MU, Nokia, Starbucks. Not sure if that was an earnings beat, Starbucks. And you've got ETFs. You've got the lot. This gives me 3 pages pre-market with all the gappers. And normally what will happen in these gappers, if it's not earning season, you will get a lot of pharmaceutical companies that have just passed testing. So if a drug has passed testing, what's going to happen is it's got a gap. You know, that's bullish news for the company. potentially open larger deals, so you're going to get a good momentum gap, and then you should see if you have good volume at the start, you can get runners and you can really just make money off those guys. So that's what I like to do, and that's what I scam for. Now, if you follow me on Twitter, you would have seen that I've posted these 3 setups. So you've got the false breakout. These are all based and derived on the same theory. So you get the 1 test, the 2 test, then the breakout on the 3rd. Anything under that, I'd rather not trade. I want to see a 3 test breakout. And as you can see here, the false breakout and then the reclaim. If that just plummets straight through, then you want to be waiting for the reclaim. If that starts holding here, then that's going to give you a separate opportunity. That's going to be the breakout retest, and if it holds, set a stop here and long. But if it doesn't hold, if it breaks straight through and it doesn't reclaim this area here either, watch for it to break through and then reclaim on this one, and then you can get a long here. Or you can get this one where the support breaks, it comes up, and if it does hold the retest, by all means short, set your stop above, and then play it to the downside, targeting lows potentially, but work out where your support is. But if it doesn't, if it cuts straight through, comes back, watch the reclaim as well. This is the bearish scenario. So they're the 3 setups that you just want to get your mind. Literally only takes a few setups, and just watch it like a hawk. There's so many stocks out there to be traded throughout the day that you can only just pick 2 to 3 setups. You can even do 1 setup if you want, and just scan your eye like a hawk, train your eye to see that setup, and you'll start just locating it with ease. You can fly through stocks and just pick them up straight away, and then you get comfortable with the setup. The problem is with a lot of traders is that they've got 7 to 8 setups, and they're trading all different kinds of things, and it's all starting to get a bit, their mind's getting a bit too much information in it, and sometimes that's not good. The KISS theory, keep it, well, can't even talk, keep it simple, stupid. I sounded a bit stupid there because I couldn't even get my words out, but literally just derive a simple strategy that you can just be consistent and act like a robot. That's the main thing. Don't think like a human all the time. Just act like you're a robot. Just train your eye to just hit those buttons when you see certain things flash up, and you just get used to taking the trades. You get comfortable taking the trades. So as you can see here, there's this support here. Was waiting for it to break down. It didn't. It held. Didn't take the trade. But these are as you can see, that was the earnings beat. But then you've got things like Netflix. You had this huge resistance level here. It ended up breaking out, and you was waiting for the retest. Didn't happen. That's the thing. Don't go FOMO into this. Wait. You have to learn to be patient. If it comes and it holds, we'll buy. If it dips down, like we said, if it goes through and then comes up and reclaims the level and holds, then we'll enter along. If it comes back down and it rejects off this level for an over/under, then we'll short it. We have no bias in the market. We're just taking the trades as it comes and watching what price does. So here you had, like, what image is it? This one right here, the false breakout and a reclaim. 1 tap, 2 tap, breakout, didn't hold, came back up, fouled at the resistance. You'd open a short here, play it to the downside. Your time was running out here because you was at the end of the day, so you want to make sure you close it and take profits into support. These are quick scalping techniques. What else do we have? Nokia. As you can see here, multiple tests, breakout. We was waiting for the retest, didn't quite get it. So now this is on watch for tomorrow's session, Monday, because you still do have this level of the flat top breakout. You have the 1 test, the 2 tests. So if it does do a 3rd test, we'll be looking to see if it holds, reclaims, or does an over/under, and then we could potentially play this for a short. The thing is that you want to, the best times that these work is when they break to new high of days. So for example, if you came up and it came down here and it was floating about, and then it broke out, your targets would be the higher day, but you kind of go searching in price discovery for that day if you have the momentum coming. Obviously you do watch your macro levels. If there's big daily resistance, keep an eye on that as well. I'm not just saying look at the 5-minute chart. You want to see where the big levels are as well, and if you like trade around that carefully. But the best thing about Momo names as well that I showed about the earnings breaks and the gappers that do pharmaceuticals and stuff like that is the relative to the market breadth. So the market breadth is SPY. If you see the SPY plummeting, obviously a lot of the names in those sectors in that index will be plummeting as well. But these Momo names, that they don't care about the day change of the SPX or anything like that. They will literally just do their own thing. They've got their own brain for that day, and they will just go running. So that's one thing to look out for as well. The gappers, MU, one test, two test, broke out, waiting for the retest, didn't happen. Keep an eye on that level though, the level remains the same. And then here you had the one test, the two test, we had the breakout. And then what happened? Went down, reclaimed the level, rejected, a nice short there. We've got down to this support level right here, located from this low. So guys, I highly advise it. Even just getting a demo account from somewhere, you can get a demo account of Thinkorswim. It's 15-minute delayed data, or you can go on TradingView. They've got their own demo account. What you have to do is you have to buy the exchange data. So it costs $2 for 3 exchanges per exchange. So it's going to cost you an extra $6 a month, but you get real-time data, which is very, very important. Unless you're just willing to play 15 minutes, but you're going to see gaps everywhere. This isn't going to look as nice as it does, like last candles. It actually looks like Deribit, trading Bitcoin Deribit, where it's just gapping everywhere and there's no liquidity, and it doesn't show you the full story. So if you're going to do that, make sure you pay the $6, or if you are in the US, get Thinkorswim. Just fund the account. You don't have to trade on it, but fund the account and they give you real-time data for free. So that is one way to do it if you are over there, and I'd highly advise that platform as well. It's a very nice, sleek looking platform. You can get multiple screens. There's no additional cost or anything like that. It's a great platform. So guys, if you have any questions, give us a shout. Thanks for watching. ACX.